In this video, I'm going to talk about how I changed trading styles and why. Stay tuned. Hey traders, a very warm welcome to you. Okay, so let me tell you the story about how I changed trading styles and why, and hopefully you can take something from it that you can use in your future trading when you're adapting to different market conditions. So I started out trading shares via CFD, London Stock Exchange shares via CFD. So literally, as it says, I opened an account with a broker who's not around anymore. It was difficult to open the account. It was quite challenging to open the account, but I got it open and I was trading short-term CFDs on the London Stock Exchange. Very, very challenging at first. This was 01, 03 period that I was doing it. And it was very, very challenging. You know, the commissions were quite high. It was a difficult thing to be doing, but eventually I found a kind of a strategy that was working for me. I was trading mining shares specifically at the time, and then moving into banks and stuff. And I had this reasonable system where I would get some different strategies and setups based on sectors that I was trading, and started to see some kind of growth, some success, some actual profits after a while. But then I got to a point where I recognized that actually I was very much a short-term trader. I really enjoyed the short-term trading. This was really expensive to trade short-term. You know, the commissions were really high back then. Even though volatility was reasonably high as well on the specific sectors you were trading, you know, the commission bill you were getting was just so big. You're thinking, hang on, there's got to be a better way of doing it. So I transitioned over into Dow futures. I actually quite like the hours, trading hours as well. So I trade those from 2:30 or 2:30 open UK time right the way through to 9 o'clock. So it was okay. I could kind of do some stuff in the morning, then I'd spend some time planning, and then I would trade this specific product, which was Dow, and it was actually on the futures, or I would spread bet it based on the futures price. So a little bit of both. Now that was good because I was focused solely on that, and that worked very, very well. I tried to branch out a little bit into US stocks at that time and failed pretty miserably. I lost money kind of doing US stocks for whatever reason. But then I thought, okay, well, I'll just double down on what I'm good at. So I kind of ditched the US stock idea at that point and moved on back to Dow futures. Now, at this point in time, I'd moved because of the commission structure and that, and because I recognized I was a better trader trading short term, and this was more conducive to that. This was volatile. The Dow was volatile at this time, and there was opportunities there, and there was money to be made, and I was making money. However, you know, as it started to quieten down, you have a dilemma. You know, do you carry on and hope for the market to pick up? Bearing in mind that I was thriving on volatile conditions and really aggressive conditions. Do you wait, or do you kind of look elsewhere for other stuff? And this was a bit of a challenging time because, you know, you start to make a little bit less money. You start to think, oh, you know, is this the right thing to do? Should I start to look elsewhere? And I started looking around and bits and pieces. Fortunately, oil started really moving, and I really focused on oil. And that was a really good thing for me to do because I focused probably a whole year just purely trading crude oil futures with a little bit of DAX in between it, because I started to recognize that DAX was a little bit more volatile than the Dow at the time, and crude oil was really shifting, and that was a really good time period for me. It was a good account growing period, very, very conducive to my style and strategy. Momentum, there's a lot of downside momentum at the time, and kind of all the skills that I'd learned here worked really well, and the capital I've made had kind of put into that, and that was a real good period. And I think that, you know, this transition, when you're transitioning, this is how it works. You develop skills along the way. You kind of try things that don't work out. Like I tried the US stocks today. You move over to something back to what you're good at, which was trading short term. You try and find the vehicle that's moving, that's kind of that aligns it with your strategy, and then you nail it. You try and push as hard as you can. So moving on now to kind of where we are is a much more phase focused. This is all very, very much, I'll explain what I mean by that in a second. This is all very much day trading, very, very active, very, very there in front of the screen all day, every day, you know, every single month, every single week, always hammering it out. But now I'm much more, I know that I recognize that I'm good in volatile conditions, and this is something you can do, recognize whether you're good in volatile conditions, whether you're good in this, whether you're good in that. And so I'm very specific about when I get involved. Yes, I will still day trade if there's something very, very active going on, like we've had a lot of movement from news coming out. I'll get involved very actively, day trading an instrument, whether that's a currency pair or whether that's the DAX or that's the Dow or that's whatever. And then I'll step back when that volatility dries up because I know that I'm better off doing that. Also for things like if we get a movement in shares or stocks, probably US stocks more than UK stuff. But if there's some sort of catalyst that's creating a bit of volatility there, I'll get involved with that. Maybe I'll day trade it and hold it for a swing trade as well. So I'm not somebody now who sits in front of the screen all day long. That's not really what I wanted to do. I got to the point where I realized this is not really where I want to be. And again, it's just evolution as a trader and kind of what you want to do as a person and what you're good at, what you're not good at. But I also recognize that I'm not that good at picking swing trades and holding those for multiple days. And just not that good at it. You know, I just have to have my hands up and say that's not one of my strong points. I am, however, much better at getting really focused when we've got intraday volatility, capture some of that move, and then I can hold something for multiple days or even multiple weeks, having taken something out of the market in a day trade. So it's a bit of a different style, and often I will have positions on that I've got from actually day trading, then holding a chunk. Maybe I bought a low, quite a nice low position, hold up, I scaled some out, and I'm going to hold a chunk for multiple days. So that's really where I am now. So why am I telling you this? The point is that, you know, each of these reasons to change becomes either a reason that the market has put on you. The market is not in the same conditions it was. You're not making the same amount of money. You can't really use the same strategy that you were using. And if you change strategies, you've got that choice. Do you change strategies like I had the choice here? Do I change strategies and go to kind of mean reversion, quiet trading? Or do I find something that is another market that's moving and I can use my style? I went for that option and it was a good choice. That's the choice you may have to make is, hey, do I stay with this market? Do I stay with this stock, this basket of stocks? Or do I kind of use what I'm good at and find something else where I can put my skills to use? And then evolution as a trader. Maybe you are swing trading, but now you've got more time. So you want to do the opposite of me and saying, hey, I was swing trading, now I want to do day trading more focused. Or maybe you're day trading and you say, you know what, I don't want to be in front of the screen all the time. I'm going to push back into a more swing trading, and maybe they can work for you. Or maybe like you, maybe like me, your swing trading is not as good as productive, but you're better off focusing, still day trading, but focusing it on a very specific opportunity that comes up every kind of, you know, once a week, 2 times a week, once a month, whenever it may be, and then getting laser focused on that. So, you know, I'll be interested to know your thoughts in the comment section below of how you've changed your trading styles, however long your trading career is. You know, and even actually I could spend a while talking about this initial phase of how I moved from different kind of stocks and different moving stocks and high price stocks to low price stocks to trading opens, trading this, trading that, spotting out. You know, there's plenty of other iterations within each of these, but this is kind of the broad pathway just to show you that I often see that other traders are very, very similar. You know, they started out doing one thing, moving on, maybe they're now trading perhaps options or something that fits in more with their lifestyle, and they've generated the skills they've used from there, the risk management skills, and now work very well for them. Perhaps they've got more money that they can trade a different strategy, or they've got more time, whatever. It's adapting and moving along with your lifestyle, your skill set, and obviously the capital you've got. All right, guys, hope you enjoyed the video. Thumbs up if you did, and see you in the next one. Take care. Don't forget to keep your risk managed. Bye-bye.